customers. And with that, I would like to bring on the folks from CalNonprofits Insurance Services. We're so pleased to have Amy and Cathy here today. And with that,
Hi.
I think I'll turn it over to you two. Thanks for crashing this party and lending your expert voices to our community.
Thank you so much. Hi, everyone. My name is Amy Neuman. I am the Senior Vice President at CalNonprofits Insurance Services. I oversee our property and casualty department. I would like to say thank you to Robert and the association for hosting us, and also to all of the attendees for taking some time out of your day. I know this topic is it can be a very difficult one. I'm very passionate about this topic. That might sound a little bit over the top because it's insurance, but it is the only coverage that I know that is so dynamic in terms of the demand on the employers to know the various parts of the workers' comp in terms of navigating classification, audits, claims, X mods. It's a really a heavy lift for employers. I've been in insurance as a broker for 29 years, and the last 11 have been really focusing on helping my clients with implementing best practices and improving outcomes in those various areas. And sometimes you need to bring in the big guns. And that's why I've asked Cathy Divodi to partner with me on this webinar. Some of you may actually already know Cathy. We partner with her and her consulting firm on some of the more complex large claims. And Cathy, thanks for joining.
Thank you, Amy. All very well said. As I share your passion for workers' compensation claims, having been in the industry for over 36 years, starting in the trenches as an adjuster and holding other positions such as hearing rep, management, and then becoming an independent claims consultant about 24 years ago, assisting employers navigating the complex nature of workers' compensation claims. So thank you for having me. Robert, thank you for hosting, and everyone, thank you for your time today and spending your very valuable time with us.
And I'd like to introduce Emily, who's not here today, but you can see her on this slide. Emily is our client claims advocate. She's part of our property and casualty department. If you're a client of ours, you have access to Emily, not just from a workers' comp standpoint, but also navigating other claims. So bringing transparency, advocacy, and support when our clients need it most. So I wanted to make sure everyone knew Emily is available. She joined us in November. And we're going to have a poll that is going to pop up. We're trying to do is make sure that the information that we're bringing to you is relevant. And we want to tweak this and make sure that we can access as many people as we can. This is a really packed webinar with a ton of information. And so I'm going to ask that you put, as Robert said, put the questions in the comments. If we can't get to them, because I imagine there'll be a lot of questions, please email me and I'll be happy to answer your questions. So take a minute, if you could, please, and give us the answer to the first question, which describes your role. And then there'll be one other question in terms of your level of experience. So we'll take a second to do that. Great. We've got a lot from the human resources. So this topic is very, very close to your heart, I'm sure. Hopefully, after this webinar, you'll have some takeaways and ways to implement some best practices and get a better understanding of the mechanics of workers' comp. Great. And the next question? And Robert, you can let me know if when those are in, or maybe I will see those.
Just about to launch this second one here.
Okay. While that's popping up for everybody, I'll go through the agenda briefly. Like I said, it's a packed presentation, and it was hard to really make this just 101 and not get too far into the weeds. It's a slippery slope. So if you have more complex questions, please feel free to reach out. But basically, what we're going to talk about today is the origin of workers' comp, the mechanics of workers' comp, the claims cycle, the process, the cycle, the outcomes, and then get into the best practices of implementing with your team to help improve that process for your employees and your bottom line. And then at the end of the slide, there is a list of resources that you can look at for details that we've talked about today. And also at the end of, if you'll send me an email, I will give you a handout that's it's a what to know when you're injured, and it's something that I created for our clients. It's really a best practices. It's not an attorney, vet by an attorney, but it's really meant to highlight the information that all parties need to know, and it keeps everybody clear on their roles and expectations. And it's meant to be sent with oh, great, we got brand new, some experience, and then some are very experienced. Great, thank you. So the handout is something that you can put in with the claims kit or to put in with your claims kit. So that's the bonus handout. So we can get right into it. Next slide. Okay, workers' comp. So how did we even get to the place that we're in today? Actually, the first recorded workers' compensation type product was bear with me one second. I got to find my notes here. Do you see your notes, Cathy? I mean, I could talk about this, but I wanted to, there's some points I want to hit here. Okay, so workers' compensation. It started in the 18th century, if you can call it that loosely. Pirates were being compensated for their injuries while they were looting and pillaging villages. So, but really where we started to see the evolution of workers' comp was really in the 19th century when the Industrial Revolution and child labor, excuse me, were becoming more prevalent, and safety standards were at their all-time, there were really none. And so the first opportunity was that basically employees needed to pay for their own insurance or medical coverage, and that put them into poverty. They just couldn't afford that. Then the decision was, okay, well, let's maybe get an opportunity for the employees to sue the employers, which is employers' liability, and that is actually a component in the current policy today. But the real catalyst was in 1911 with the Triangle Shirtwaist tragedy, where 146 people were killed in a factory fire. And the evolution of workers' comp came out with what we call the grand bargain, which is now what we know today, which is the workers' comp as a no-fault system, providing benefits at a statutory level. So this is driven by the states. To provide coverage up for the injured worker or worker that's become ill to get back to their best self, or what we call MMI, or maximum medical improvement. And those benefits can vary. We'll talk a little bit about those in another slide about what those benefits are. But it also precludes or prevents the employer from most usually not being sued. And so it's a no-fault system. There are some types of employers' liability claims that we'll talk about in the next slide. Okay, so with the workers' comp policy, if you were to open it up, you would see that you have part one. You're looking at your declaration page. It shows the named in your name, the effective date, who the insurance company is, all that good stuff. And part one says that it's statutory. That's what I mentioned before about the no fault system, where the employee is getting its benefits to get back to their best self, and there's no limit on that. Part two is that employer's liability that I mentioned. This is typically $1 million in California, and I just want to take a minute here to say, If you have an umbrella policy or an excess liability policy, make sure that this component, part two, the employer's liability, just tell your broker, please add this to my umbrella. There's no additional cost for this, but it increases that $1 million of on this policy to whatever additional limits are on the umbrella policy. So make sure you have that. The third party cases that often come in from employer's liability is it could be an employee who is suing an employer for gross negligence, or it could be a family member that's suing as a result of this injury. It could be death, it could be loss of consortium. Those are the typical types of claims that we see. And then part three is listing the states that you operate in. Some policies can manage all states in all of the United States. Some cannot, and you may have to go out and seek a separate policy to cover if you're going outside of California. And then we get into like, how do we even get to these premiums? How do we calculate these? So there are four real components of the workers' compensation policy. So the premium calculation is based on payroll, we'll say gross payroll, and also a class code. The class code is the definition of what that employee is doing, what their job functions are, and it has a built-in rate based on the exposures of those functions. So you could reason that a clerical person's class code or its class rate, base rate rather, is going to be much different than a roofer's base rate, classification rate. So, but how we calculate that is the class code's base rate. So in this case, you'll see 0.25. These are in a percent or per 100. So 100,000 of payroll for this clerical person times this base rate would mean that annually they're going to pay, or you'll pay $250 for that person. Then we start getting into some of the mechanics of how well you are performing as an organization compared to your industry standard, which would be your experience modification. It's a merit rating system. Some of you may have an X mod, some of you may not. You hear it as E mod, X mod, experience mod. But that X mod is taking into account 3 years of your loss history, comparing you towards your other peers. If you have a 1 on your mod or 100%, it means you did exactly as the actuarials expected you to do. If you go above 1, so in this case, they have 105% mod, you're actually getting a 5% debit increase to your premium. If you're below 1, you're getting a debit. This is where a broker would be doing a good job for you, is when they are using this X mod, when you have one, and leveraging and negotiating with the insurance companies to help offset any increases in your X mod. And so that component is really important. And the way we do that is working with you to develop a claims narrative, talk about best practices to make sure that the carrier really understands all the good work that you're doing so that they can soften that X mod if it goes up. And these policies are auditable. And so some of you have maybe experienced audits in the past, and those could be a webinar in and of itself because it can be a challenge. But basically, your policy is not a set annual premium until they've done the audit and they pick up the gross payroll, make sure the classifications are correct, make sure the payroll is put in those right classifications, and then they come up with the final premium. And we can go to the next slide. This comes up a lot. So when do I need workers' comp? Why do I need workers' comp? Who gets workers' comp? And this often comes up. And so wanted to take a little bit of time to talk through this. So when you have your first part-time employee, that is when you're going to need workers' comp. It is a requirement. It's the law. If you don't purchase it, you can be fined $10,000 and up. It's a misdemeanor, and you would be responsible for all of the medical coverages if an employee were to get injured. And you would also be, I think I mentioned you would be fined. So that it's really important to make sure that you have the workers' compensation coverage in place. Who's covered? In the nonprofit world, it's very rare that you, if at all, that you can exclude someone specifically. If you're an LLC or a C or S Corp, you can often exclude those owners because they have a percent ownership in the organization. But with nonprofits, there really isn't an exclusion per se, an endorsement on the policy. But what you would expect is you won't need to cover your board members if they are not paid. Stipends don't count. So, for example, board members that serve on your board as volunteers and other volunteers that support your organization, they are going to be the best place to put them is under a voluntary accident policy. So I know that this can come up in the audits, and if you have questions about that, you can certainly ask me questions. We can talk about those at the end of the webinar. And then the other question is, okay, well, I have 1099s, so who's a 1099? And I don't know if I could throw that over to you, Cathy. Do you want to talk about that very fun topic?
Sure, it comes up quite often. The California Labor Code defines an independent contractor or a 1099 employee as someone who there's certain criteria. It would be someone who has a license, manages their own schedules, supplies their own tools and materials. Essentially, those are really important key factors. When a claim is filed for a 1099 employee or an independent contractor, the adjuster is going to ask those very pointed questions and even more as things kind of unfold. So if they're excluded as an independent contractor, then the claim would be denied.
That's true. And there's been a lot of work since, just before 2020 in terms of developing a test. So the 1099 test, you can actually go to the state fund and you can plug in, there's 3 questions that they ask that Cathy just highlighted. It's very rare that you're going to have a 1099. If they're part of the integral if they're an integral part of your operation, they're most likely not going to pass the test. But IT, what was the other one? I'm blanking. Sometime marketing could be one. So anything that's not integral to your business. And then classifications, this comes up a lot about who's going to be under what class code. That one is a challenge, and there is the WCIRB website, and that will be a link in one of the slides that you can look up your class codes to see if you're correct, but definitely rely on your broker to help you with that. There are a few class codes that you can bifurcate. So if you're really good at record keeping, in some cases, you can be in 2 different class codes. That's common in construction. But classifications is making sure that those are accurate so that when you get your audit, there aren't any surprises. So work with your broker on that. Next slide, please. All right, claims reporting requirements and timelines. So this is really important for those that are going to be managing claims or being responsible for intake. We can go to the next slide. Okay, so this is my very pretty timeline. I want to thank Copilot for putting this together for me. It's going red to green. Red is when you first noticed you've been notified by your employee that there's been an injury, all the way to green when the claim is closed. Let's hope that timeline is only like 2 weeks long, but the reality is that claims can take a lot longer than that. So I wanted to just highlight here quickly that there's some requirements for you as an employer. So the first is keep, as soon as you get the notice from your employee, give them that DWC-1 form, and there's a link to that form in our slide, within 24 hours. And within 5 days, you need to notice the carrier, and you can do that with the first report of injury report. It's also called a FROI. And this, I want to take a second here. If any of you have workers' comp that has nurse triage, if you don't have nurse triage, let's talk. That is a really important tool. But if you have nurse triage, they'll actually handle with the intake call the first report of injury and report that to the carrier for you. But if you don't have nurse triage, fear not, you would complete this form and you would send it to the insurance company, and that would kick off the claim. then the carrier has 14 days from receipt of that first report of injury to let you know what are they doing. They're going to investigate it. They're going to be in that time frame from 14 days up to 90 days. They're going to look at, are we investigating it? We are investigating it. Are we going to accept it? Are we going to delay or are we going to deny? And the critical component here is that the carriers have a very limited time to accept, delay, or deny a claim. Cathy's going to get into that, why it's so critical to report immediately. And then we all celebrate. We've gotten to the end of the claims resolution, and the claim is closed. Happy ending.
Yay.
Right. So, Cathy, you want to take the next slide?
Yeah, absolutely. So when we were putting this presentation together, we wanted to highlight the different types of claims and the life cycles of the claims. And as some of you who have handled claims or have overseen claims know, there's no way to really fit all of these in enough boxes. We could be here all day for the next 10 days and still not cover everything. However, we wanted to highlight some of the important types of claims. The first and foremost would be an accepted claim. That's your traditional, easy, straightforward claim that involves medical treatment. Sometimes if the person's losing time from work, there's lost time benefits, maybe partial lost time benefits payable. The individual returns to modified duty or full duty if they had lost time. Treatment continues all the way through the time they are declared at maximum medical improvement, meaning they've plateaued, they're not going to get any better or any worse, or they're discharged from care. And then the claim is either closed or it's settled depending on the final evaluation. And we'll discuss that a little bit further in. Then we have the typical denied claim. A denied claim happens, as Amy said, in the first 14 days of a claim, the carrier has that 14 days to either issue an acceptance, a delay letter, or a denial. After they have decided to do a delay, the carrier has 90 days to make that decision to accept or deny. An employer level investigation will take part, maybe the carrier will sign an investigator, take statements, they'll ask for any personnel records, et cetera, subpoena of records, past employment records, past medical. All of that stuff is done in order to defend the claim. During that 90-day delay period, some employers don't know this, the employee is still entitled to medical treatment subject to a cap of $10,000. That's the maximum in that 90-day period, all the way through the denial date. So they are entitled to it. It does go against your mod. So it's important to make sure that the carriers are doing everything they can. If there is enough reason to deny the claim outright, it's best to do that. Otherwise, sometimes we have to go through the motions and in order to get as many reasons to deny and defend the claim so it sticks. The denial.
Cathy,
Sure.
can I ask you a question about that? So if an employer has a claim that essentially is denied, you could still see on your loss runs up to $10,000 for medical. Is that correct?
Absolutely.
Okay.
Sometimes
Okay.
even more for deposition
Okay.
fees, et cetera. Yes.
Okay.
Good
Thank you.
question. Obviously, upon completion of the investigation, if they have reasons, they issue the denial notice, and then either the claimant will either seek counsel, defend an applicant attorney, or they will sometimes not dispute it, and the claim can be closed in usually 30 to 60 days. If the claimant doesn't request, if the employee could actually request a QME if they're not represented on their own and get a second opinion through the QME process. So that is also an option to try to overturn the denial. So yes. And then we have litigated claims.
That's our least favorite. I'm
Our
sure that's
least favorite.
everybody's least favorite, right?
And we're seeing an influx of a lot of litigation, and even in Northern California, it used to be so much bigger in Southern California, but in Northern California, we're getting hit hard. Claims become litigated for many reasons. Sometimes it's a dispute regarding compensability. Sometimes it's entitlement to benefits, the benefit rate or amount, etc. And the application for adjudication is what starts the claim being litigated at the Workers' Compensation Appeals Board. It's the first form that's filed, and it's usually filed by the applicant attorney, the employee's attorney. Discovery can continue even if a claim's been denied. The discovery will continue on all the way through a mandatory settlement conference, usually. So that discovery meaning subpoena of records, further investigation, additional medical legal evaluations, such as a qualified medical evaluation, which we'll talk about. And in a litigated claim, an applicant attorney and a carrier can agree upon a state panel qualified medical evaluator, one that they know is kind of middle of the road, as opposed to reaching out to the state panel and getting a random selection, which we never know what we're going to get. Upon receipt of that QME report, because an agreed medical evaluation report is a QME report, essentially, the case is sometimes postured for settlement in that as long as the claimant's reached maximum medical improvement. Otherwise, the evaluating doctor may give a treatment plan or treatment recommendations that are carried over to the treating physician to follow and recommend reevaluation later. And that's what we're seeing a lot of lately, unfortunately, with these litigated claims. Litigated claims, keep in mind, litigated claims can settle at any point throughout the claim process. If all parties are in agreement and they come up with a satisfactory amount where the judge is going to approve it, that can also happen. And at any point, either party can request a hearing to resolve any issues that come up. Litigated claims are resolved by way of settlement, or if they go to trial, findings and award by the judge, or sometimes in some very fortunate cases for an employer, dismissal. And then the last section here we have is for disputed claims. After a claim is denied, the unrepresented injured worker, someone who doesn't seek an attorney, may request a QME if the dispute is based on a medical opinion, and that QME report will typically be the followed report, unless there's something wrong with the report. Parties may seek an AME, or litigated parties may seek an AME or a QME, like we talked about on the litigated claims. That AME or QME report is issued, and then the compensability determination is reassessed and used to determine benefits owed and or the case value. And that
I would love to hear too, if anyone has had any questions related to, some experiences in this process, if there's any, or want to share any opinions or thoughts related to this. This is what I call the black hole, because what employers don't realize is how much involvement they can actually have in this process. And what we would never recommend is a hands-off approach. There really needs to be a lot of involvement, which is why this has such a heavy undertaking or for employers. Can we go to the next slide?
So benefits available. So for the normal typical claim, your benefits available would be obviously the first and foremost medical treatment. That would include everything from doctors to physical therapists to acupuncturists to chiropractors, durable medical equipment, prescription medication, mileage reimbursement for the employees to and from. The other benefit, which, is part of this benefit delivery system that workers' compensation in California provides to an employee, is immediate lost time compensation. And that's referred to as temporary disability in California workers' compensation. Sometimes it can be temporary partial disability if the person's only losing some time. Maybe they have modifications to their schedule and they're only working part-time. They get compensated for that. And then there's permanent disability. Permanent disability is a benefit that compensates an individual for their inability to compete in the open labor market. Oftentimes, I will get an employer asking me the question of why can someone be released back to full duty, but yet have permanent disability? And it's really, the term permanent disability has become a bit of a pet peeve for me. I like to refer to it as permanent impairment because someone can easily have permanent disability or permanent impairment, if you will, and still be able to do their usual and customary job. That permanent impairment is compensating that person for their diminished future earning capacity. So in the future, what can they do? Maybe they might not be able to do the types of jobs that they would have been able to do before they were injured on your job. So that's why they are compensated. And that permanent disability value is determined by a doctor, whether it be a treating physician or a QME, and that doctor will come up with a percentage based on the AMA guidelines, and the permanent disability rating guidelines, and will determine that percentage will translate into a monetary value. And then ultimately, the claim is settled based on that value. The other benefit that I wanted to talk about today was the supplemental job displacement benefit voucher. A big mouthful. We call it the SJDB voucher in workers' comp claims. And that's essentially when you have an employee who has reached maximum medical improvement. Usually it's once they've reached maximum medical improvement, and they've been deemed unable to return to their normal work duties. They've been given permanent work restrictions that then you need to determine if you can accommodate. Usually that's in the interactive process. That's an employment issue. But you usually have about 60 days from the time the carrier provides that information. It's actually 60 days from the date the carrier received the report. So that timeline can change. But they can be entitled, your injured worker can be entitled to up to $6,000 in reimbursed benefits for tuition, books, equipment, anything pertaining to their retraining for another vocation, including licenses and fees and things like that. Some people use it, some people do not. Some people use part of it, some people don't use it at all. It is just definitely another benefit available. So I think
Next slide, Robert.
all right. So in California, we have basically two main ways of settling a claim, but we threw in one that comes up in rare occasions. The first one is when someone reaches maximum medical improvement, like I mentioned before, they're assigned a percentage of permanent disability. The first way we mention here for settlement would be by way of stipulations. That's just simply an agreement to the level of permanent disability as defined by the evaluating doctor. And that would be paid out in biweekly installments at a maximum of $290 a week until the full amount's been paid. The applicant attorney fees are taken from the front end of the settlement, which is usually about 15% of the overall settlement. The second way we settle a claim, which is usually the most advantageous, is the compromise and release, which is a lump sum settlement. It settles everything, and sometimes you can even include the voucher in there. And there's no recourse for coming back on that.
This is the one we like the most, right?
Yeah, this is the one that closes everything.
This is the cleanest.
Exactly. I want to revisit stipulations I didn't mention. The stipulations, once the permanent disability has been paid out, during that entire time and the lifetime of the claim, usually the individual is entitled to future medical care Again, usually for their lifetime, unless the evaluating doctor says otherwise. So that leaves that future medical care open and even their right to reopen for more disability down the road, subject to statute of limitations. So that's why the compromise and releases sometimes the most, as long as it's cost effective, the most advantageous because we end up with a closed file.
Mhm.
The third and very rare situation would be a situation involving a compromise and release that closes out that new and further disability issue. It closes out all indemnity benefits that would be any lost time benefits or permanent disability benefits, but it leaves the future medical care open. And there are reasons why. There are certain reasons that we won't delve into because that's a whole nother subject. But there will be an occasional reason for cost effective purposes where we would want to leave the future medical care open. So that is the other one.
Thank you.
Anything else, Amy?
No, I think you covered it. We'll go to the next slide.
Okay.
Ooh, this is the juiciest part, I think. This is like now we're getting into the nitty-gritty. We can go to the next slide. It's a busy slide. This slide is to talk to you, employers, about the things that you can do to help manage the workers' compensation claims process. So I mentioned that there's a handout that I'll share with you, and it identifies the roles and responsibilities of the various people that are involved in a workers' comp claim. So you have the injured worker, the employer, the adjuster or claims examiner, and they represent the insurance company. You have the treating doctor, which is through the medical provider network. In California, we should mention that no employee should be going to their own doctor unless they have already pre-designated them, and that document is something that they would sign when they're hired. That MPN document should be as part of your onboarding package. And then unfortunately, the other person in this party could be the AA applicant attorney, someone that the injured worker has hired. So the most important things that employers can do, and this is just some of the things, but I'm going to talk about the communication. So I mentioned that some employers take a handoff approach and let the insurance company handle it. That leaves the employee with trying to navigate something that's really complicated. It's not a smooth process. They can feel concerned. They feel like their job might be in jeopardy. And so it's really important to usher them into the system and be responsive to them and check in with them, especially when the employee might be going out on lost time, touching base with them, making sure that they're making their doctor's appointments, that if they have any questions, they're talking to you. This is also really important to emphasize that they're the most important asset to the organization. So you want to make sure that they're taken care of. That reduces also the need for litigation. So when you're communicating with them, there should be an expectation that they communicate with you as well, the employee. So after the recommendation is, as an employer, you should be getting a work status report from your doctors after every visit. And you should be hearing from your employee with the same. It may sound redundant, but what it does is it allows you to pick up any discrepancy between what the employees heard and what the doctor is mentioning. Also would say that there are times when you're going to get a work status report that maybe takes the employee off of work and you have modified duty, but the doctor doesn't know that. And so communication with the doctor, like, hey, Cathy, actually, we have opportunity to work with her in the office. There's plenty of things for her to do that meet these restrictions. So we don't want to have her off of work. There is definitely ability to work with the doctor based on the things that you know that they may not know. Make sure you're investigating these claims. Make sure you're reporting them timely. As mentioned, there's only a certain amount of time for an insurance company to accept, to deny or delay a claim. If they don't have the information within the 90 days, they have to accept the claim, whether or not they wouldn't. If they wouldn't have, they lost that opportunity to deny the claim. So it's critical to get those claims reported. And if you are challenged with hearing back from your claims examiners, If you are not sure where to go, this is where your broker comes in. So lean on them to help navigate. Claims examiners or adjusters really should be responding to you within 24 to 48 hours. This is something Cathy does day in and day out. I do it with my clients. Cathy is involved in really some of the more complex claims and managing them. But if you have enough claims, there is a reason for you to be able to have a check-in on a quarterly basis. Maybe it's annual, but it could be quarterly. And you get all of the claims examiners involved and you're talking through the claims. It's a really great way to understand where this is at, avoiding any surprises or preventing surprises that might come up. These claims are very dynamic. They can move very quickly. Reserves can change very quickly. And so by staying in touch with the adjuster and your employee, you'll be aware of those changes. Never do we want to have a surprise when you get your experience mod and you realize all of a sudden that it went from a really great one to a really horrible one, and you don't know where. That's that black hole was talking about. That communication piece is critical to avoid the surprises. There's other things that the employees should be doing. They should be attending, and this is noted in the letter that I'll share with you. They should be attending all appointments. They should be communicating after every visit, every primary, maybe not after, chiropractic or physical therapy, but the primary treating physician is the one that's going to be directing whether or not they need to continue care or if they can be released. What are some other things that I might not have mentioned, Cathy, that would be important for employers to know?
Well, I think to the point that you made about making sure the treating physician has an understanding that modified duty is available, sometimes even reversing the process rather than waiting for the doctor to release, like you mentioned, even bullet pointing just a few things that that individual can do. For instance, if you have someone with a right upper extremity injury, logically speaking, you would just say, okay, what do we have available where the person could, if they had to put their arm in a sling or would have no use of that arm and be able to sit, stand, or what have you, what jobs would you have available, and just make it almost to the point where the doctor couldn't say no. So, and you have your
Mm-hmm.
adjuster present that to the
I
doctor,
love that.
and that's rather than waiting for them. So I'm glad you brought that up, Amy. That's a really good topic.
You also made a point when we were going through these slides about checking in with the clinics on a yearly basis. You want to talk a little bit about that?
Yeah, we have the clinics within the medical provider networks that we're utilizing. And, we all know that the big ones are going to be Kaiser. And we've got, so Kaiser on the job, and then we also have Concentra. Those are the two big ones in most every medical provider network. And then you've got some small industrial clinics that, are here and there. But if you're utilizing and you've identified a clinic or one that's a Kaiser or a Concentra or one that you're using frequently, my recommendation is for you to meet with your clinic annually to make sure they understand the nature of the work that you do. You can do them virtually. They're usually pretty open to doing it. It's a reminder when you have modified duty available, the kinds of jobs that you have available.
Mm-hmm.
Some providers will even hold job descriptions in a file for you.
Concentra does that.
Mhm.
Mm-hmm.
And so does Kaiser. So
Okay.
it's very important to stay in front of those providers. And because if they have you to answer to, you are essentially the customer. You're sending your injured employees to them, and you have a choice. Sometimes not a
Mm-hmm.
lot of choices, depending on the geographical
Mm-hmm.
location, but
Right.
you do have a choice. So it's important to do that because they do change. Sometimes I find myself after a few years going, this one's not so good anymore. And then I
Mm-hmm.
flip over.
Mm-hmm.
Really, at the end of the day, healthcare is kind of suffering in general. So we have to
Mm-hmm.
keep
Mm-hmm.
everybody on their toes.
That's a really good point. And the return to work, there's two questions that I'm going to answer live, one from Sherry and then one about reporting an injury if no medical required, if there was no medical or no less time. I'll get to those questions, but I wanted to mention the modified duty is really critical for bringing back employees. as soon as possible. And there are studies on the next page that talk about, if we go to the next slide, um, return to work can reduce costs of workers' comp from 50 to 70%. And that is a staggering number. But the reason is one, I mean, obviously it's a monetary mechanic. If the insurance company is not paying the employee, then it is not going on your loss runs and it is not going into your experience mod. And your experience mod, those claims sit there for 3 years before they fall off. So it's an exponential savings when you bring an employee back to work in some capacity. Now, there are some rules about how you bring back, offering modified duty. They need to be reasonable. They need to be within, of course, the work restrictions. But it's really great for everybody to have a productive employee to stay within connection with their employer and bring them back in. In fact, when you are hiring someone, part of your onboarding can be, hey, we're a keep at work company. We want to keep employees productive, and we will not let you sit at home. If there's a workers' comp injury, we will make sure that you're involved. You're part of our family, and that sends a message in two different ways. One, if you think you're going to come here and take a workers' comp claim and sit at home, you can think again. But the other is, we really care about you, and we want to make sure that you're productive in earning the most salary that, or back to financial norms. The other thing is about reporting. And there was a question here about, do you still have to report an injury if no medical was required and no lost time? And I'll tell you that the carrier is going to say yes. They want to know every single claim. And that's the answer. Some employers, I will say, some employers will give the DWC-1 to the employee, and then if the employee returns it, then they report the claim. The challenge with that, though, is if you knew about it and you did not report it, and it's exacerbated, the carrier then has lost any amount of time between when you didn't report it or when you knew about it and didn't report it. The carrier loses that time to investigate it and accept it, and then you're on the hook.
So if it is, sorry, Amy, just to interrupt.
Yes.
So if it is questionable in your mind, it's best to report it even if there isn't any medical treatment.
Right. You can send in that DWC-1 or first report of injury rather to the insurance company. You can let them know it's a notice only. This is something that, you're not sure, but this is important to know. Insurance companies have the right to pursue the claim whether or not you want it to be a notice only. They may say that this is something that is there. I don't know if there's a test, but there have been times. I work with a lot of agencies in the healthcare industry, and they have injuries that they think, okay, this is something we're going to actually need to look at. Cathy, something I've heard you say too on calls with our clients is making sure that you get a return to work, even for a medical only claim. Can you talk about that?
Well, return to work, a medical only claim would be where
If it's a
already
medical only,
back to
they've not lost any time and they just want to come back to work. Or you've had where you've required the employee, let the employer know that they're fit for duty. I guess that's really the question. Always have a fit for duty release, regardless of the type of claim. Yes.
Right.
Okay.
Right. Always make sure, because sometimes I find that employers lose track of and especially if someone has been off for a short time or was released to modified duty, they stop asking for the work status. You just want to make sure you stay on top of making sure they've been released all the way to full duty and they don't stop treatment midway through when they're still on modified duty, because technically you don't have a release back to full duty. Sometimes that
Right,
will happen.
that's right.
Mhm.
Thank you. And Sherry Farley, you had a really great question. The question is, are there any studies between employers to offer medical insurance to employees versus those who don't? Is there higher rates of workers' comp for employers who don't? This is such a great question. In fact, this is actually a question on the application when you're applying for workers' comp. Do you offer benefits to your employees? And if so, what percentage? Because yes, absolutely. If there's an avenue for them to get medical coverage, it is less likely for them to file a workers' comp claim. So that is a really great question. So, in benefits, if anyone is interested, Cal Nonprofit Insurance Services offers benefits even for the smallest of agencies to large agencies. So if that's something you're considering, or we have some that will offer, maybe dental and vision, just some additional coverages, and also to be competitive in the marketplace to attract talent. So next slide, please. Oh, actually, can we go back to the previous slide? Thank you. So my email is below. There's the handout that I mentioned. Please email me if you'd like to get the handout that you can put in with your claims kit. There's a couple other things that as I mentioned, there's just so much information here. In your claims kit, there is a first fill document that is something that should go with the employee if they're going, it can be electronic as well. It is a prescription card for the first prescriptions that an employee might need when they're being treated for an injury that has not yet been, a claim number hasn't even been established yet. And the insurance company pays for those out of pocket, the prescriptions that need to be filled initially, so that the employee does not have to pay out of pocket for this injury. So if you have, let's say it's a weekend, let's say they need, they call their on-call manager or whomever, and they've got an injury. There's a packet that you can send them. You've directed them where to go for, like maybe it's the ER, and then electronically you can send them this document so that they can fill their prescription. So that's really important. And then this other document I have is what to know if you've been injured. The next slide is really just a list of things that you might hear in the world of workers' comp claims. And we insurance is famous for insurance jargon, and what the heck does that mean? And so here's your Rosetta Stone to the things that we talk about. And lastly, we have the slide with all of the links to the things that we've mentioned. Someone asked about the 1099 test that's in here. And then just a little bit about Cal Nonprofits. We were born in 1984. We are a subsidiary to the Cal Nonprofits Association. Colleen is our CEO. I oversee our property and casualty, and Cameron oversees the benefits. We are passionate about protecting you and your organization and your bottom line. And if there's anything we can do, even for a dialogue or a conversation about where you're at with your insurance, we'd love to talk with you. And I want to thank Cathy for her partnership with us and all the work that she does for our clients.
Thank you. My pleasure.
If there's no other questions, I think we might be at the end, the top of the hour.
Thank you so much, you two. We covered a lot of ground during that hour. And I appreciate all of your insights and complex and comprehensive discussion and sort of analysis about the process. Just a reminder to everyone, because I did see some questions in the chat, we will be sending out a recording of this presentation with all of the slides. I'll also include both Amy and Cathy's contact information. So please feel free to reach out to them if you have further questions. I know they'd love to hear from you. And thank you also for joining today. It's really great and important for us to hear your voices from the field so that we know what's going on and what's happening and occurring in your life. So thanks again for joining us, Amy and Cathy. It's always great to have you sharing your expertise with our community. We appreciate your support and look forward to having you back soon. Thank you again to all the registrants, and have a wonderful
Thank you. Thank you.
Thank you.
Happy Thursday, everybody.
Thank you.
Thank you.
Bye now.
Bye-bye.